guys, it's Brenna, the CEO and founder of The Mortgage Shop. I wanted to come to you and answer the age-old question, can I use rental income on the property I am purchasing? So for investment-only loans, the answer is yes. So let's talk about conventional loans other than DSCR. So DSCR is not conventional. I'll do a different video on that soon. But conventional, there are two different ways you can use proposed rental income. The first is if you are a first-time investor within the past 3 years. That means you haven't owned a property like a short-term rental or been a landlord within the past 3 years. You can only use enough to offset the mortgage payment. For example, let's say the rental income comes back at $5,000, but your mortgage payment's only $3,000 and you don't have any prior rental experience. You can only use that $3,000 to offset that mortgage payment. Now let's talk about the second way. Let's say you are an experienced investor. You already have a long-term rental, or you have a short-term rental, or an array of both. You can use the full net proposed rental income that comes back for that subject property. So again, let's give that example. The net rental income comes back at $5,000. Your mortgage payment is only $3,000. You are offsetting your mortgage payment plus adding an additional $2,000 to your income for that deal alone. I emphasize for that deal alone because once you close, you aren't going to use proposed rental income because you already own it. So you would either need to produce a lease agreement to use that to show rental income, or you would need to wait to file that year's tax return if it's a short-term rental to use that income that you produced. The normal way that we get rental income is on a rental income worksheet on the appraisal, or what's known as the 1007. We look at your property, and then we look at every other property in a 3 to 5 mile radius that is similar to yours that is sold within the past year. So let's say your property is a 2-bed, 2-bath with a view. We look at all properties with 2 beds, 2 baths with a view that have closed within the last year. We take all of those numbers into consideration, come up with your average rental income, and that's how we get your rental income for your subject property. So you don't have to worry, if you have poorly managed before you got it, or it was just a second home before you got it, or it's a new build and has no rental income. You don't have to worry about that because we look at other properties as opposed to just the property you're purchasing. That's the most common way, and that's the most common way that we use. Sometimes with DSCR loans, you have to hit a specific ratio, so debt service coverage ratio. Sometimes you will need short-term rental income data as opposed to just what comes on that rental income worksheet on the appraisal. If that's the case, we can use STR data like AirDNA to show that rental income for your property that you're purchasing for a DSCR loan. So keep that in mind. But again, the most common way is that rental income worksheet on the appraisal, or what's known as the 1007. You can't use proposed rental income on a second home loan, because the primary intent first is what? Being a second home, vacation home. Then you can rent it out afterwards. However, you just can't use that proposed rental income for that property. The same goes with the primary residence, unless it is a 2 to 4 unit. So if it is a duplex, you are allowed to use proposed rental income with a lease agreement on a primary residence if it is a duplex or higher. A single family, you cannot use proposed rental income on a primary residence if it is a single family residence. That's it, guys. I hope this explains what type of rental income you can use on your loan. Let me know if you have any questions. Like and subscribe, and I'll talk to you soon.